Beyond formal trade corridors and big companies, millions of small businesses, traders, and networks are quietly moving Africa's goods across borders every single day. In this session, we bring to light how this engine really works and what it means for the continent's trade future. With us is Tofunmi Thomas, CEO of TDExports. Well, we're talking about how the informal sector, that is traders, small-scale exporters, aggregators, and all that, how they actually move goods within Africa, so within borders in Africa. So can you give us a rundown, a bit of explanation? When we say the informal sector or the informal trade, what exactly do we mean? And how big is its role in actually moving goods in Africa?
Okay, so let's start with the informal sector now. We call it informal sector because it doesn't run with the regular strata. So a formal sector will be that we run by the policies, we run by the nitty-gritty, the dictates, different certifications for your product, approval phases and the likes. But informal will be meaning that they circumvent all of this process, and in fact, they don't use the same route that we use, because that's where they can negate the enforcement. So that is how it works to that regard. Then I didn't catch on the second question.
So how big is its role in actually moving goods within Africa?
How big is its role? Because of the fact that it's informal, we can't really say we can quantify what they do, but they do a reasonable measure, yeah. And I could say certainly that most of what they do are really craft. Now, craft, things that are handmade, designs and all of those things. And that would really move faster, because when you're selling a craft, take for example a piece of hat, you don't really need a NAFDAC seal on it. You're not consuming it. It's something that beautifies. If it's an handcraft, it's probably something that beautifies something you want to wear and the like. So I could say, yeah, they're doing a lot, but we can't quantify it, and it's majorly in the aspect of craft. Because for perishables, that's agricultural products, they really can't do a lot, because once you're exporting, the really goal for export is that you want to make a lot of money. Yeah, because export is a niche that you could get a lot. So once you export it, you want to get a lot of money. You want to also be, now if you're putting more money in this thing, you want to be sure of what you're buying. Did you get it? So perishables are not really the best. So I would say most of what moves in the informal sector are really craft. Let me say craft and art. Let me categorize it majorly that way. But we have other things. Definitely we do.
Okay, so you mentioned that this informal trade doesn't really go through the same route that the normal export has to go through. Yeah. So can you give us paint a picture of how an informal trade route actually looks like? Yeah.
So when you say paint a picture,
so just throw more light on it.
I would throw more light on it, but first of all, for clarity's sake, I can't paint a picture because I've not used it before. So I can't paint a picture. But I would say I'll bring it back, because I have a bit of background in international relations. So they are what we call transnational ethnic groups. Yeah, these are ethnic groups that exist in more than one country. We have the Somalians that exist in Uganda, Somalia, and Kenya. We have the Hausas that we know in Nigeria. Yeah. They exist in Benin. They exist in about 3 countries in West Africa. We have the Fulanis. Now, one of the things you want to understand that because of the division of Africa, our division was done by colonial masters. Yeah? So they didn't know the boundary. They just cut at the Berlin Conference. So now they are cutting now separated brothers. Are you getting it? So we could be siblings, but now we're in different countries. Some of these communities don't have the regular route. So take for example now, regular route have places where you have law enforcement that checks all of what you're doing. But at the regular route, there are not all of this law enforcement. And the truth is, I can say certainly that because of the division of a country like Nigeria, we can ascertain the number of irregular routes we have. Because tracing this back, I'll be tracing back to the transnational ethnic groups. Do you get it? That is where we now have to create a borderline. Let me give a very popular example now. The war President General Trump clamored for, separate America from. Now, he deliberately did that because he knows what he was doing. Yeah, a lot of us didn't like it. But then if he didn't do that barricade, we have a lot of communities that will still be crossing over, having the interlap. And how many more checkpoints do you want to put along that Great Wall? So I think that's what it's all about. So I would say most of the informal routes are really places that we are not aware of and are majorly in this inter or transnational ethnic groups. Do you get it? And the likes.
Okay, so if probably someone has to go through those routes, are there like systems that are in place to actually regulate that or something like that?
That's the regular route.
Yeah,
Definitely.
this informal route.
This informal route. For the informal route, I can't say much, but the fact that it's informal really makes it not open. So like I said, I've not used the informal route before, so I can't say much about the informal route. But one thing I can say is that definitely even bandits have rulers. Do you get it? So there'll be a way they do that thing, but I can't say much. But definitely there'll be some sort of governance, there'll be some sort of regulations, there'll be some sort of rules that guides all of these things. Do you get it? So that's just.
Okay, so let's go to the difficulties in actually exporting goods between different countries or within borders. So what do you think, or in your opinion, what would you say is the most difficult part of exporting goods within Africa? So intra-African trade.
Intra-African trade. Well, I'll say, first of all, our biggest issue could be looking at currency valuation. Now, as an exporter, if I'm to export, let's say, a 24 metric ton of hibiscus, I charge in tens of thousands of dollars for that. I can't call the actual price, but that's the amount I would charge. But if I'm to sell to another African country, they don't have the purchasing power. So rather than selling to them, yes, it might take me some more time, but I'd rather just sell to where I can get a bigger profit. Because it's seemingly almost the same process, just that because of treaties like AfCFTA and the likes, we now have lesser regulations, but purchasing power is not the case. So there's a place of lesser regulation, but how about the place of purchasing power? Do you get? Because it's a really big question that we want to look at. I'm in business to make profit. Business is not an NGO, it's not an NPO. I pay my tax. So I want to make profit. I want to make the best profit. So that's what really leads us to the international market. Do you get it? Not the international market outside Africa. Because the truth is, if it will cost me lesser to export to an African country, I will just export to an African country. Do you get it? But profit-wise, the margin is way smaller. Do you get it?
I get. But then the distance, is that not a factor that could maybe cover?
So the thing with export is we have different Incoterms. There are Incoterms that have to do with the terms of payment, terms of export. So now, if you're doing, God of mercy, you guys will not understand what an FOB is. But then if you're doing an FOB, for example, now, that's free on board now. If you're doing a free on board payment method, that means the buyer is covering the payment of the export. They purchase the whole logistics. But if it's a CFR, we are covering it, it's included in the charge. So if I'm exporting to, let's say, Kenya, for example, and the distance is closer than China, you get the distance closer than China, but then how much would they buy? Like I said, it's profit. Yeah, logistics could affect the logistics part of it, but export doesn't work in a case that logistics influences our first cost. So in export, we have the product cost, we have logistics cost separately. Then definitely the contract of sale could bring it together, but at first it's separate. There's a standardized price for export, and most of these things are quoted in dollars. So that alone has put African countries at a minus. Did you get it? But then for a Nigeria exporter, you get what I want to say. So,
it's something that is beneficial.
It's beneficial. We're not saying our currency should remain like this, but praise God.
So with African countries, you talked about, you guys now trading in dollars, and it's way profitable to trade internationally than within Africa. Yeah. But then so for things like the AfCFTA, so they're trying to make all of this work together. They recently introduced the PAPS card to make payments more seamless within that. So would you not say, would I say it's a bit of a disservice to African countries because I mean the goal is we're like close. We're supposed to be like brothers and then sisters and then
well, in this case, it's not a disservice as it might be. And I don't know what our policymakers have, but I would say we still need to do more in the case of policies. Yeah, like I said, I might not be way popular, but a PhD student, PhD holder is an authority in the field. One of the major points of unity for Africa would be a joint currency. Do you get a joint currency? Because Pascal that they just introduced now, it's a tool for payment. It didn't change anything. But then, typically, it just makes transfer easier, payment receiver easier. But then the major issue with export is pricing. Do you get it? And purchasing power. If I want Kenya to patronize me, if I want my sister to patronize me, that means that I'm going to be shortchanging myself. And because of the bureaucratic process of approval, a lot of certifications we want to get, all of those things are also added to the cost of the goods. So can these guys really afford this thing is the question. But if we have a unified currency, now, a unified currency will now put almost all our economies at the same strata. Yes, the downside would be if Nigeria has a problem, everybody has a problem. Especially because Nigeria has a lot of population. So definitely it will influence our currency value. But the good side is it's going to first give a jump to all of the currencies. So the gap between the naira to the dollar won't be a lot. Do you get it? So we can now easily even engage trade. And another reason why we don't get to see most of these things is because aside for probably countries in probably, let's say Eastern Africa, most of the countries in Western Africa, I could say we all produce the same thing. We can plant hibiscus in Nigeria, you can plant hibiscus in Ghana, you can plant moringa in Nigeria, you can plant moringa in Ghana, cocoa, the same thing. Name most of our agro export. So for us is what I would say, most of us are literally competitors. But I would say Nigeria just always has an edge because we are Nigeria. So even in the field of export, a Nigerian exporter has an edge over it's Nigerian. We're the giant of Africa. Yeah, we might not be the best, but we still have some good name. Do you get it? So we have a good name to leverage on. We might not have what some people might call the best governance, but Nigeria is just Nigeria.
Are you saying that puts us a bit forward compared to
it puts us
just
forward.
The name?
Yeah, just the name. Yes. Yeah.
That's something that
it's goodwill. So in a case where we have to have, let's say about 3 exporters going for the same deal, especially when it's a mass deal, they'll trust the Nigeria more to deliver because they know we have hit more than them. And one of the reasons is because they look at our landmass. Now, when we now look at the landmass, they look at our agrarian landmass. Nigeria has a lot of agricultural land, a whole lot, compared to the neighboring. Nigeria is literally the biggest country landmass in Western Africa. Do you get it? So it really gives us an edge in that regard. Okay. Do you get it?
So you mentioned policies. So basically talking about policies that actually, so at ports, customs and all that. So what policies or how exactly do policies really stand as a factor when you export?
Not just when I export. I'll start with the fact that policy is governance. And governance as a nation. You are in a country, what's keeping the country sane is because there are policies. Without policies, the country is not sane. So in export, the policies are there to rule and overrule, no limit, no extent, and also even give a checkmate. And I dare to say that policies are even an advantage, which is one thing we don't talk about. So let me give you an example now. There's this thing we call GMO in agriculture now, where you have GMO plants that were probably built in a lab and the like. Now, if you're exporting now, there's a non-GMO practice in some country, and some countries accept GMO. Now, why some people don't accept GMO is because some researchers have proven it to be cancerous. That is when you take some of those products, it leads to cancer. Now, policies protect. So take, for example, there's no policy in Nigeria, and everybody's doing GMO. You know it's definitely going to lead to backlash because nobody's going to buy it. Take, for example, in countries like US, you can export GMO. They don't tolerate it. US, UK, Asia, some countries do, some countries do not. Do you get it? So what do these policies do? They shield us. Okay, this is acceptable. This is not acceptable. And honestly, I would say a round of applause to those policymakers in that regard. A round of applause to the custom services, because they really do a lot. And as opposed to what we probably think that the red tapeism in that regards is a lot, it's not really a lot. They don't take a lot of time to respond because they know that this thing is ongoing, especially when we are on season. Now, because it's agriculture, we have on season, we have off season. Do you get? So in the period of on season where we have a lot of dues that people are moving and the likes, a lot of goods and services, we really do not have a lot of backlash. Do you get it? So it's just for the policies, I would say the major thing policies do are to guide the tone of trade, guide what we do, approval of our. And the truth is, because we know there are policies, we now also want to put in the best practices to what we do. Because if there are no policies, what exactly is laying the demand for you to put in the best practices? Do you get it? So that's just it.
So what policies do you think is actually helping, like, if you?
So policies that I would say is helping exports. I wouldn't like to call any out, but I'll make reference to this one. So currently, because of the new shift that happened at the federal level, the custom is now under FIRS. I don't know if you're aware. So there's said to be a drop on custom duties. Though for agricultural products, there's really very minimal. So for agricultural products, it's subsidized. Unlike products like automobile, what we get to pay is really subsidized. But now, they're even saying there's going to be a reducel again. So if we're doing more of that, it's going to be a plus again to the industry. And the only reason why I would say I really like what they do is because all of these things in turn now comes back to data, comes back to research, help us to now reinvest. Do you get it? So that's about that.
Okay. So you mentioned that the customs are now under custom duty. Can you give shed light on that a little?
So I think everybody's aware of I don't know, but there's been a recent tax reform. Yeah. Now for the recent tax reform, now made most of the what would I call the income generating forces under the tax. So we now have one central system for tax, just a central system. Then everything goes through FIRS. So custom, port duties, all of those things, port authorities are now through them, who makes the work simpler. So that way nobody can even evade tax. So because they are the one in charge directly, they see your filing when you're vying for product, they see your filing. So that way they already know your consumables, so you cannot come back to circumvent tax process. Because one of the issues we have in Africa is that most of our businesses want to circumvent tax process. Do you get it? But in this regards, nobody can circumvent tax process because it is clear and it's open. Do you get?
So let's talk about product certification.
Okay.
Customs. Can you?
So product certification, I would say for me, the first standard I like is that the fact that there's a non-GMO. Do you get? You can still choose to do GMO, but you know that it's generally not acceptable. Do you get? So I like that fact, and for the packaging rules, do you get it? And I would say also for products is that based on your market now influences your trade. So now for GMOs and non-GMOs I mentioned, yeah. If, take for example, your customers are people that demand GMO products, it influences your decision. So I would say for export, internal regulations just affect, but the external countries says a lot because at the end, they are the one consuming, we are not the one consuming. Do you get it? So it's really based, so you create a product based on the market. Do you get it? So when you're exporting, some people will tell you, this must be the tone of what they're expecting to get from you. These are the preservatives to use, these are the preservatives not to use. Do you get it? And some preservatives are so strong that they could keep your product for as long as 12 months. So, but some, like US, you can't use preservatives for their product. So I would say one of what I've even been able to figure out is that some countries remain giants because of their rules. Take for example US, they are really very particular about the shipment coming in. You will see them ban shipment because of just an insect. Just on a particular bag, and they ban over 100 bags. Do you get? So things like that. So I would say export policies now, it's not just about us, it's also about them. Yes, domestic policies, that's how we plant, what we plant. In fact, sometimes they give grants to farmers and the likes. But also it's also about where we are going to. Do you get? It's also about where we are going to. So it's just that.
So you mentioned that when exporting, so let's talk about exporting agricultural produce. from Nigeria.
Yeah.
So how does that work exactly? So you mentioned preservatives and all that. How does?
Okay, so the process first, I'll say is on farming. Yeah. So are you exporting moringa? Are you exporting sesame? Are you exporting cocoa? Are you exporting hibiscus? Do you get it? What exactly are you exporting? So start from farming, then from farming to packaging. Do you get from packaging now to export? Now, based on the distance, now if you're exporting to a place like China, it's quite a distance. You might need to engage preservatives to keep your product.
Well, let's say within Africa now.
Within Africa, depending on where your warehouse is, there's some places in Africa that you get to even by road in less than 24 hours, depending on where your warehouse is now. Do you get it? So take, for example, you're going to a place that's closer to Northern Africa and your warehouse is already at Maiduguri. You see you're close. But if your warehouse were to be in Lagos, there's quite a distance you're still going to. And like so. That's where it falls back to what you said about us being neighbors and supposed to be able to benefit. Do you get it? So it's just that.
Okay, so for the preservatives that you use in your agricultural products, are those like when they go through I don't know, customs and all?
Yeah. And so for customs, for preservatives, definitely they are whatever preservatives you're using definitely must have NAFDAC. They get it. So NAFDAC must have NAFDAC approval. So but then like I said, some countries now kick against preservative at all. Some like I said, a lot of the product and the tenant of the product is based on where you're exporting to. Do you get your market? So really, like every other space, export, yes, policies plays a lot in export, but then your market plays the most important role in export. Your market plays the most important role.
So when you're exporting, how do you gauge whoever your buyer is? So credibility.
So I say just like every other business, you decide who your buyer is. You get to. There's a place of networking. There's a place of networking. There's a place of referrals, and so those are so similar ways you can get your customers are networking, referrals, trade fair. You get a stand, display your product, and the like. There's a lot of export that you can put out your product and you get referrals. So that's really the major way of getting clients. But then I would now be sure. Take for example, one of the most popular means of payment in export now is what they call is a credit letter now. I've forgotten the exact name. So it's like a letter, like a fiduciary letter that they send to your bank that once they receive the product, they pay you. But now, you've had some recent issues in export whereby you export based on that particular letter they send to your bank, supposed to be payments. But then, if they claim something is wrong with the product, it withholds your payment. So letter of credit is the word I was looking for. So now, for letter of credit, most of us don't engage letter of credit again. Because that way, our interest is most likely might not be protected. So we only advise letter of credit for a client that you have done business with over time. That is now trust. Because letter of credit seems to be like the most popular form of payment, but it's not really advisable for a first timer, really a first deal, because I'll show you that the person has integrity. Do you have what it takes to now go and sue the person in their own country? Do you get it? So
what other option is?
And the other options now, some people do. So the other options now is based on what's your contract of sale. Some people do 50% upfront. Some people do 50% upon cargo received. So it's now based on your discretion. How best you think you can work. Do you get it? So my times might not work for you. Somebody else's times might not work for me. Do you get it? And like I said, there are still companies in Nigeria today that use letter of credit. So it's just what pays you in your relationship with your client.
Okay, so what about currency-related issues?
Currency-related issues, yeah. Currency-related issues, especially for exporters that are UK, which is pounds, Europe, euros, dollar focus. They really don't have currency issues because, I mean, you're getting paid. If you're converting your 70%, it's quite a lot of money for you. There are really not a lot of currency issues. Do you get it? And at least now that we've now allowed our own traditional banks to now be able to do international transactions directly, my God, we're good to go.
So that has also aided intra-Africa?
Definitely, intra-Africa, even with the rest of the world too. It's definitely going to cause a lot of change because some companies are now had to go and lean on, fintech, which in business world, most people tell you is not sustainable.
Why is it not sustainable?
That's you're catching me on calm. So I would say because we're still a bit traditional, so we've not trusted the fintech bank to that point. If you notice, an average market woman will use money point to sell produce. But do you know when all of them get home at night? At least I know a few personally. When they get home at night, the first thing they're going to do is transfer their money out of out of these so fintechs. So my question is why? They'll tell you they use it because for seamless transactions, but they don't trust them with their money. You see that GT bank that they are complaining that the network is bad, is still where they go and put their money. And like the Medicis now that started the heroes, the family banking heroes of the world. Now, when you study history, they'll tell you one of the reasons why a bank had that big structure. If you notice, banks don't come small. You can't see a bank in a container. So the psychology behind the big structure is that it looks big so you can protect your money. Do you get? But most of this fintech,
But now they also have their own structures.
now they also have structures for fintech. That's why. But then you can't compare the structures with fintech and the structures for a commercial bank, traditional bank. How many structures? Take for example, one of the biggest in Nigeria should be OPay. How many offices does OPay have in Lagos? Do you want to compare them with Access Bank? I think you get it. So all of these things are the basis for trust. Why people still trust these ones than they trust the other. You get it. So it's just that.
Okay, so let's come back to the intra-African trade now.
Okay.
Are there some regions or some markets that are more, well, I'd say, accepting than others?
Than others, definitely. Some markets are more open than the rest, and it boils down to I would say purchasing power policies, and the most important part that most of us don't like talking about when it comes to is manufacturing. Now, the reason why we export all of these things to Europe, it's not because they want to eat their hibiscus leaf. It's because they make a lot of things out of this product. They make tea, they make juice, they make a lot. For some of them, make medications out of this product. Do you get it? We eat food. We use medications daily. We need all of those things. We need manufacturing plants for those things that are owned by Africans in Africa. Because what you see now is, yes, people will say there's a new wave of manufacturing coming to Africa, But who is the owner? Is it owned by Africans or Asians, like we regularly see now? You get it, so just that.
Okay, so you talked about manufacturing. Is it that, Africa as a continent on its own doesn't really look at manufacturing too much, or we are not too into manufacturing?
We're not too into manufacturing. We have a bit, but we're not too into it. We're not too into it to the tune at which we export. Now there's a volume of export. So for us to have more trade, we have to increase the volume of manufacturing to a certain point. Because the truth is, if we have a lot of demand here with good purchasing power, there's no need to interact with them up there. Do you get it? But then, there's really no demand here. So in fact, for an average exporter, what comes to his mind first when he wants to send a product is outside Africa. Do you get it?
So manufacturing is something that could actually bridge
the gap between, it's a bridge a lot of gap. A lot.
So you talked about how we export the raw materials and then we import
the
finished product. So how do you think, or is there a way that maybe we could subsidize it, or?
Like I said, the only way of subsidizing is the manufacturing. I will go back to one of my political heroes that said, Mahatma Gandhi tied the wrapper to a popular UN session. I'm sure that if it was now, it would still be trending. And he said, if India cannot make their own clothes, they will go naked. And today, India is one of the largest exporters of textile.
That's something the African market needs to look at.
Manufacturing is something we really need to look at. It's not just the point of planting, it's the point of manufacturing. What do you want to do with this thing? You want to own the top of the value chain, from the farm to the manufacturing point to the end goods, then distribution, then servicing. And if it's for servicing and dealing with customers, we already have the client base. We have the client base. So the real gap is manufacturing. We don't have. So I would really advise that we do a lot of investment towards our technology, that we hit manufacturing.
So is it that we don't have, or we don't have enough?
We don't have enough. If we were to look at what we have in commensurate to our population, You just shake your head. I don't think we can beat on an average of 5%. That's why you hear things like soaps are even imported. We're importing soap that we're using to wash. We're importing toothpick. It's not ridiculous. You get it. So all of those things, we really want to look a lot into manufacturing. We want to look a lot into manufacturing. Okay. Yeah.
So let's move on to, as an exporter, how has AfCFTA helped you?
For me, because I don't engage a lot in now I'm African. I love Africa.
Let's do Africa.
I'm an Afrocentric entrepreneur, but I wouldn't say I've gotten a lot of African deals yet. But I look forward to having more of African deals. Looking forward to more sales expo happening in Africa, where we could get a stand and get African deals. But I wouldn't say I've benefited a lot directly, but then I've met a few places that will tell you that, it's really helped them and the likes. But then it's still the same story. Everybody wants more profits.
So you majorly trade globally.
Yeah.
So as an African exporter now.
I like the fact that you say an African, just like it's in.
Okay, African so as an African exporter now, what do you think it's giving way to that global trade for you?
Giving way to
like what is paving the way, or what is?
I would say first of all we have precedents. Even since colonial era, Africa used to be Nigeria rather used to be one of the largest exporters of cocoa that we used to make, tea that we used to make. So we've always been known to export agricultural produce, always. So it's just like we're keeping up to the tenant. So it's nothing really special. It's just a new generation doing the same old thing, basically. Just that.